Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. As we look at the week that was, we can see that all three major indexes, the Dow Jones, the Nasdaq, and the S&P 500 all rose for the week, actually pretty significantly. You can see the Dow Jones up over 2%, S&P basically about 2%, and the Nasdaq just under 2% for the week. What was the key events that led to this spark? Well, as you can see, Friday the S&P basically bounced about 2.5%, and that was the best one-day gain since December. However, despite that big gain on Friday, the S&P still in the month of June in the red. We also saw, due to the proposed beginning of EU oil sanctions on Iran, which starts to start on July 1st, we saw a rally in crude oil, 9.4% there on Friday, which allowed it to go up above 6% for the week. The big news that we had coming out here on Friday was that the Eurozone officials finally opened the door to Spain's banks for the bailout funds. And they also increased the funds, the ability of the Eurozone Central Bank to have more money to deal with the situation in Europe. So that gave some strength, some confidence to the market, and we saw the euro rally almost 2% against the dollar. As far as corporate news, we still have J.P. Morgan in the news, and as you recall earlier in the month, it was reported that we had Jamie Dimon, the CEO, testifying both in front of the House and in front of the Senate Financial Committees about this loss that they had, and he guaranteed that they were going to have a profit for our new rounds of earnings. But this week it was reported, initially they said it was a $2 billion loss, and it was $3 billion loss, and this week it was reported that it may be up to $9 billion in losses. And so that sort of helped hurt the financials. This week we also saw Google unveil its new line of Chromebooks, and I'm kind of torn about that as the geek in me. Okay, I can hear some of you saying it. I'm a Mac guy, so yes. But I'm not talking about the, which is better. I'm talking about the concept of a Chromebook. The concept of a Chromebook is simply a laptop that is cloud-based. Everything that you need is in the cloud. So all your applications, all of your functionality is in the cloud. And that brings about two concerns. What happens if the cloud goes down? Now, I've never heard of it, and I'm sure most people think it might not happen, but what happens if the cloud goes down? You lose your data. Remember, the purpose of the cloud is so that you don't lose your data. How many of us have had our hard drives die? But is the potential that the cloud could go down, and the reason that you have your stuff in the cloud is not to lose it, and you lose it. But more important than that is a laptop that is internet dependent, meaning that it's basically a paperweight unless you have the internet somewhere around. I don't know if we're there yet as a country. Now, internationally, access to the internet, mobile internet, broadband internet is leaps and bounds ahead of where we are here in the States. But here in the States, because obviously here in the States, we don't have it everywhere. So the concept is what I'm referring to there. But I digress. And in that, hating everybody besides Apple, RIM had horrible announcements. They're shipping out less BlackBerry, the phones. They're shipping out, certainly their playbook, continues to be a dismal failure. And of course, they announced that their new BlackBerry will not be available until 2013, when it's supposed to be available for the holiday season of 2012. Nothing really went on here on the economic side this week. They really drilled the market. Really, it was the Eurozone giving confidence to the market on Friday. So going into next week, what do we have? Nothing. Although we are basically getting ready to gear up for our new rounds of earnings. We don't have anything next week. Keep in mind the market is closed on Wednesday for July 4th. And then you can see we have employment situation on Friday. Okay, so as we look at our market simulators, the first thing we're going to look at is the dollar. And one thing that's interesting is that you can argue a couple things. You can argue that we have, well, let me zoom in. You could argue a head and shoulders pattern in here. You can argue that we have an M pattern starting to form in here. Wait a minute, shoulder, head, shoulder. Or if you can include this all in one big move, you could say that's what I'm saying. You have a double top, triple top, whatever you want to say. But you can really see the impact on Friday's price action. Now, we found a little support in the 50 moving average. We'll see if we find support at 81.225 here like we did before. We're also 81.5. Will we find support here? That is kind of where we wick. But you can really see the impact of Friday's action. So sideways, but being very cautious about these triple tops, double tops, inverted head and shoulders patterns, M pattern. Got to be very concerned about that if you're playing the dollar. And of course, we have the inverse relationship. We'll really see the inverse relationship right now with gold and the dollar. And we just saw the weakness of the dollar. Zoom on in here, and you can see this nice big candle here that gets us back almost up to 1600 here on gold. So gold, which has been choppy, but what's interesting, and I'm just seeing this now, so I'm just kind of winging it, but if we look at what's going on in here, maybe not be as impactful as I thought it was. We certainly have a bit more impactful if I do it that way. We have some potential resistance coming in here also at 1620. And you can see that in this price action in here. But look at that move here on Friday. And the last thing is crude oil. Now, we talked about the big move of crude oil. And you'll really see that. Look at that over here. I mean, look at that big move. We went right through pretty much the whole market profile there. And of course, what we're hoping for is that we'll see some resistance here at 90. We've got 50 moving average coming down here that may act as resistance, but we're in this 80 to 90 channel now. As we were coming down, there was some resistance here at 85. You can see some wicks in here, so that'll be interesting to see if we get that. But you can see we got through a lot of this volume accumulation, and we could see this continue to move out. And again, the big thing about that was the European Union's sanctions that are going to begin on Iran's oil on July 1st. So this down action, I'll say sideways for right now. Not ready to go bullish yet. Going to zoom on in here on our daily chart of the S&P 500. And the first thing I want you to notice is that we had a swing high here back in late March, early April. And that was met again later at the end of April, early May. And we kind of hit it a little bit here in mid-June, but you can kind of see this is kind of where we're at. So we have this 1370, and this downtrend line is basically where we reside, where we closed here on Friday. So this is that great candle from Friday, that 2.5% gain on Friday, the best day since December. gain. You see the big data went down here from last week, but you can see we've come into resistance. Our indicators are all now back to being a little bit bullish as we get closer to being overbought, but we are at a key point of resistance. And so, there's nothing wrong with being here. We certainly can stay overbought for periods of time. We did that for the most part through our big move up here. During this big move up, we stayed pretty much in overbought range for a long period of time. So there's nothing wrong with that. But we want to make sure we have momentum, and certainly the jobs numbers next week can be that momentum. Now when we scroll out and go to our weekly time frame and zoom on in, the one thing we'll note is that when I talked earlier about being down for the month of June, we're not down for the month of June. So, let me put that in the context of what happened in May. We still have not taken back that move of May. We are up for the month of June. But again, you can see clearly, again, this downtrend line and where we're at. Our indicators on the weekly also turned bullish here, although MACD hasn't fully crossed over yet. But what we'll really see here, what we want to zoom in here, is on our monthly. Alrighty. Sorry about that. And this is where we'll get a clear view of what I'm talking about. Remember, May was not good for the market, and June has not taken that all back yet. We are at a key point of resistance. I'll zoom in a little bit more here. There we go. So there's June. Have not taken back all of that move from May. Our indicators are again in the bullish overbought range, but again, we can stay that way for a long period of time. Remember, this is our monthly chart where we're staying in overbought, so that's not the thing. So the key is to recognize we need to have the momentum to keep the market moving higher, and potentially our jobs number next week can do that, and earnings season starting back up may bring some positive news also. And so speaking of earnings, let's move over to the NASDAQ, which has been the biggest driver for 2012. Come on down here to the daily. There you go. And we'll zoom in on our 2012 price action. And what we'll see here is that we're back in this range of 2850-ish up to 3,000, but we really need to get above 2950-ish. You can see resistance here. We have some gapping going on here. We have a swing low right here, and that's basically where we're at. So much so, I'm just going to go ahead and draw that in. You know how much I love my support and resistance line. So that's what we need to get above in order to get up to that 3,000 price level. So we need to get above this 2950-ish, 2947-ish to get into this next range up. And one thing that's interesting, if you look at it, for the most part, these are big candles in this range, so we potentially could get a big move here. But on our daily, they did turn bullish here this week. Again, largely because of that Friday's price action. Zooming in on our weekly, we can see the month of June here, and we can see the big move here the last 2 weeks. We thought when we had this inverted hammer, I had to say that I was a little bit concerned. Still room to go to the upside on a weekly. So daily and the weekly have room to go to the upside. Our monthly, it's interesting because S&P did this, and something with this monthly slows down, I think, a swim platform here. Zoom on in. Again, you can see we have not taken out May's price action, but May is at overbought. I'm sorry, not May. The monthly is overbought, so we do have a conflict there between our shorter time frames and our longer time frame. And again, the key is going to be gauging momentum. We are in the summer, which typically means lighter volume, lighter volatility, and we'll need the catalyst of the jobs numbers, of some type of earnings, to really get the market moving one direction or other, or we may be range bound for the summer. Okay, so we're going to look at the daily chart here of Apple. And of course, the market was good for Apple too. We can see that on our market profile over here. But what we're coming into, we did get just above the 580 level, but you can see if you zoom in a little bit here at the 590, there's also some resistance there. So it's good that we're above the gap up from way back here. But also in the last month, we've seen some resistance at 589, 590. But for that being said, Apple starting to look sideways to up. Amazon. Zooming in on Amazon, well, Amazon looks pretty good. Of course, Amazon had this great earnings. We gapped up above our 220 price level that we've had in for a while. It was support. We broke through it, and now we seem to zoom on in here a little bit more. We can see that we're back above it. You can see where we have our next level around 232, 235. But Amazon, I'm going to say sideways to up, even though it's still a little bit of a downtrend, but liking what we see here. Facebook. Facebook had lived, but it came right into the resistance that we've drawn in, and it's come back, but it's finding support. So it's in a nice range between $31 and $33. Facebook sideways, maybe even sideways to down. Notice one thing over here. Again, if we get below 31, you can see on our market profile that there's plenty of room to fall to get down to 27, because on our push up we had two big candles, which means we didn't have a lot of volume pushing us up, so we can easily fall right through that. Google. We talked about the news of Google this week with the new Chromebook. And Google is not following, Apple, Amazon. Google is actually a little bit sideways to down here. And we did once again find support in this 560 range, and it's trying to get back here into the 580, 620 range. But I'm going to be nice to say sideways in Google, but you can see that we certainly have a series of lower highs. If we can take out some of these, then I'm going to have to say sideways to down. Sideways to down on Google. What about Goldman Sachs? Does it live? It didn't really participate that much in Friday's price action. We got a little gap up here, but we didn't see the push afterwards. So we're back in this 94 to 100 price range. You can see there's some wicks here at the 97 price level. So I'm just going to say sideways to down on Goldman Sachs. IBM. I think that's interesting about IBM is you can say that we probably have a wedge starting to form here. You can see the ultimate support here of the 200 moving average. That's great. But as we zoom in, what I noticed as I was getting prepared for the video is that we really could come in here and start to draw, some type of a wedge here. So we have the support of the 200 moving average, and we have this downtrend line coming in. So the market's really going to have to want to break one way or the other. We're starting to see that consolidation build up. We'll see the same sideways on IBM, and we'll see the same thing here on Intel. Again, we see if I take this line here and draw it down, this is what we'll see. And again, the 200 moving average acting as support. I'll switch back over and zoom in for us. I'm going to say sideways on Intel also, but you can see that consolidation range beginning to form up. You can also see it here on the market profile. MasterCard. So a lot of sideways stocks, a couple sideways up, mainly sideways, some sideways to down. So we were really not seeing that leadership. Maybe we'll start seeing leadership from our stocks as the new round of earnings season starts. And of course, we have our jobs numbers coming up as I continue to repeat. Kind of like Apple, above the 420, above a key price level, but it has a little resistance here in the 435. Sideways, maybe sideways up, high sideways. We still have this swing high here, and we have a lower high here. So that's sideways. Can't say sideways up. Netflix. I may remove Netflix. Netflix was on our list because of the big flyer, and now that it's flying down, we brought in Facebook. I might have to send me, post a comment, bring me a stock that you want me to include. But Netflix is no longer to me a leader. Sideways on Netflix. If it gets above 70, we might get up to 74. Sideways on Netflix. And finally, Priceline. Give me a suggestion of who to add. Used to have REM. REM fell out, so Netflix is falling out. Sideways price action in here, in that nice range between 620 and 680, right in the middle in the range, dead zone. So sideways for Priceline. As we come to our education spotlight, we're focusing on what's your plan. As you know, we certainly have an emphasis here on having a training plan. And although we're not going to talk about what it is, today we're going to talk about why you should have one. And here we have that there was a survey of some students at the Harvard Business School. And certainly these are smart individuals. They're at Harvard. And what they did is they interviewed them and they brought them back 20 years later. So they've graduated, they've moved on in their life, and they come back. And what they found was that those students who had goals for once they graduated were worth 5 times as much as those students who had no goals. But what is more important is that the students who had written down their goals were worth 10 times as much. So you can see that you potentially can double your wealth, double your net income by having down written goals that you're trying to achieve. Again, I know that it's boring. I know that it's cumbersome. And I know that it can sometimes feel like a nuisance. But having goals is one thing. Having goals written down is another thing. And having an action plan is the final thing. You have to have the knowledge, you have to have the opportunity, and you have to take action. And writing down your goals so that you can have a plan and steps to accomplish your goals can greatly increase whether or not you actually accomplish that goal. As always, please comment, like, subscribe. I've been dealing with a lot of spam here lately, so I know that's not you guys, but I had a lot of spam here lately. But let me know what you think. And you know about our resources. We have our coaching program where we help you develop your trading plan so that you can have actionable steps, rules-based trading versus trading on a whim. We have our managed accounts that can benefit you. And of course, we have some tips for our stock traders. All of these can greatly increase your profits at the end of the week. But in the end, it's all about your ability to develop a trader's mindset based upon a trading plan so you can have a psychological capital to pull the trigger on each and every trade. Thanks, guys, and I'll see you next time.